In this video, you'll learn how to complete an income statement. Here is the information we'll be working with. These are the adjustments and additional information for the business. Here's the income statement of the business for the year ended February 28, 2022. Don't forget to include this heading because sometimes you'll get a mark from it. The first thing you must do in the income statement is write down the sales amount. You will write it in a bracket and not in the final column. The sales in this example were 8 million. Now you must look for any adjustments or information that relates to sales. The second adjustment relates to sales. Goods sold were returned, so the sales amount must decrease. The business decreased sales by 9,600 instead of 6,900, so sales were reduced too much by 2,700. So the sales amount is too low and must be increased by 2,700. Now you must calculate the cost of sales. Take the adjusted sales amount and use the markup given to calculate the cost of sales. Calculate the gross profit. Now you move on to the income section of the income statement. The next thing you must do is look in the pre-adjustment trial balance table and find all the income amounts that are not sales or interest income. The only other incomes in this example are rent income and bad debts recovered. Put the amounts in brackets first before putting it in the total column. Next, look through all the adjustments and find the adjustments that apply to the incomes, as well as the adjustments that create incomes. You must analyze each adjustment by asking what happened and what should have happened. These are the 3 income adjustments you must analyze and include in the income statement. Remember that discounts received is an income account. Now you move on to the operating expense section of the income statement. Look in the pre-adjustment trial balance table and find all the expense amounts that are not cost of sales or interest expense. Put all these expenses into the income statement and put the amounts in brackets because we haven't done the adjustments for them yet. Now look through all the adjustments again and find the adjustments that apply to the expenses, as well as the adjustments that create expenses. These are all the adjustments relating to expenses. The new expenses created will be trading stock deficit and the provision for bad debts adjustment. The provision for bad debts adjustment will be an expense because in this example the provision is increasing and the new provision will be higher than the old provision. Now you've done the hard work and all you have to do is remember the income state format to finish off the task. Calculate your operating profit by adding your gross profit and other income, and then subtracting the operating expenses. Add interest income based on the information given from the adjustments. You must always show the profit before interest expense, and the net profit before income tax. Subtract the tax from the net profit before tax to calculate the net profit after tax.